The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady, and we're going to talk taxes to make sure you learn stuff about your own income tax. Because, my gosh, you think about how much that you pay in taxes, and what we found about how the federal government spends it in many cases, and we want to make sure that you don't overpay. So I'm Esther Gulius from EG Tax, and I'm joined in studio here with my buddies, Tiffany Fabian.
Hey, happy Saturday.
Happy Saturday to you, Tiff, and Christopher.
Hello,
Fabian.
Esther.
Hello, Christopher. Okay, so right now we have all of our offices open. I believe they're all open tonight till 9 o'clock.
Correct.
And on Sundays, we have our McKinley Mall office open. And for those of you that are in sunny Florida, where we are not, we are in Buffalo, New York, and we're freezing our cadotes off. But you guys in Florida, in Marco Island, Naples area, we have an office on Airport Pulling Road right across the street from Tamiami Ford, and we welcome you to the show as well. Right?
Definitely.
Okay, so I wanted to talk about something that we really have never touched on, but I think it's very important, especially if you know a senior or you are a senior, and as life goes on, what do they say? Poop happens, right? And so, so sometimes you need somebody to be a caregiver for you, and there's a special program that maybe you were not aware of, and we want to make you aware of it because it's also has a tax aspect to it, and it's called the Medicare Waiver Program. And Chris, you want to talk about it? Or you know it, Tiff?
Oh, yeah, it's actually the Medicaid waiver program.
Medicaid, right, Medicaid
Yeah.
waiver. Thank you.
So the Medicaid waiver program is if you need care and there's places like Freedom Choice, and you care for a relative and you get paid for it. So they pay, like the government Medicare has sanctioned certain companies to be their go-between, and Freedom Care, for example, is one of them. And you get paid for it. You then get to, if the person lives in your home, you can subtract the income off of your wages, but you have withholdings for it, and so it's a beautiful thing. You don't have to pay any taxes on it, but you could still get earned income credit on it if you qualify for the earned income credit.
Let's make it simpler here. So if you are somebody that needs someone to assist you to live in your home, and you hire somebody who is a relative usually,
Right.
who lives with you, that relative will be paid by Medicaid, and that income that relative who lives with you is going to be tax-free on the federal and state return, tax-free.
Right.
And if your wages are low enough, you'll qualify for the earned income credit. And if you have children living in your home with this person, you get a bigger earned income credit. So it is unbelievable. So for those of you that might need home care, and you have a relative that's willing to live with you, that relative would then work tax-free, even though they're getting paid.
Yep, and it's
Right.
called the Medicaid waiver program.
Yeah, so if it's your granddaughter, grandson, daughter, and, they were going to take care of you anyways,
Right.
now they can get paid.
And it's like $30,000.
Right. We've all seen those commercials on TV. I'm so glad I have my granddaughter
Right.
staying with me now.
Right.
That's what this is.
Right.
Yeah.
And the thing is, to think about this, you'd make 30,000 tax-free dollars.
Yeah,
And so it's for Medicaid.
right. And then in box 12 of the W-2, it should say II, and then the wages would be sitting right next to it because it's then going to be subtracted off of your wages.
Right.
Yes.
So we just wanted to mention that. A lot of people, though, qualify for Medicaid, and they don't think they do. Do you guys have any expertise on this?
Yeah, I do. So if you are a person who lives in New York State, there's a phone number and they can run the numbers to see if you qualify. And usually you cannot, if you're a single person, you can't have assets of more than 25,000. If you're a married couple, it's double. You could also, if your assets, if your income that you make is more than the qualifier, you could do a pool trust and you could put your income in a trust and it's called a spend down and you could qualify for Medicaid. So there's lots of different options. If you don't qualify the standard way, you could do a pool trust, or the spend down is what it's also known as.
Okay, thank you, Jim. So anyway, we just wanted to make sure that if you had a need, that you would understand that that is a program by Medicaid. Many people qualify for Medicaid that they don't even know they do. This week I had this lovely man come in that was listening to our show, and he never knew about the IT 229, and so and he also didn't know about the $1,400 stimulus. So I got him the $1,400 stimulus and $350 for each of the last 3 years, and that's, ignorance when you don't know the tax law is not bliss. I will tell you that. That's for sure.
Right. And for a single person, the income limit's $1,732 a month. For a married couple, it's $2,351 a month.
Okay, and that would be the Social Security income.
Well, any income.
Any income, right.
But again, if you're over, you could put it
In that trust, right. Okay, I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. And remember, anybody can go to our website at egtax.com, and you can go to Ask the Tax Lady, put in your question, and I will get back to you right away. Right?
Yep.
Okay, so we have some
We got a text. It says, I'm a creditor in a bankruptcy case in which the debtor received a discharge. Can I write off that bad debt on my income tax? Where? Thanks.
Okay, well, first of all, if you have a bankruptcy, they forgive the debt. So
Well, he's the person owed money to.
Oh, is that what they're saying?
Yes.
I'm the debtor. I'm the
creditor.
I'm the creditor. Okay, that's true. Okay, so then that would be possibly a business bad debt. In order for you to take an expense as a business bad debt, it has to be a bona fide debt that you would have to have actually, they'd have to sign a note, and you must have made good conscientious effort to recover that debt. Now, once they're bankrupt, you're good to go.
Right. If it's listed in a bankruptcy, I would assume that would pass all the tests.
That would be a Schedule D, short-term capital loss.
Yep.
That's where it goes.
Definitely.
Good question.
Right, good question. I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. We got another short text here?
Sure. I have a W-2 for a normal job. I also have an LLC. I do 3 other jobs under the LLC. 1 is consulting, 2 is special mechanical testing, and 3 is a charter captain. Will I file 3 separate Schedule Cs for each of these?
In order for any business to be an umbrella, they all have to be related. And I will tell you, I don't think that a charter captain, a mechanical tester, and a consultant are in any way related to one another. So as far as I could see, it would be 3.
Well, I'm consulting on medical testing while I'm driving a boat.
Okay, that's true, but not really. So, but the thing is, you have to do, you say, I have an LLC. Each one of those would have to be an LLC if that's what you're talking about. So maybe the consulting is
The LLC.
right, and the boat captain, you never applied for that. So, but they're all taxed as sole proprietors.
Correct.
Right? All right, I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. We're going to take a short break, and we'll be back with your comments, questions, and whatever else. Hey, this is Esther Golias, the tax lady from EG Tax. I was just talking to our IT specialist here, and I was complaining because my Facebook got hacked. For those of you that think I'm selling Ford trucks, I am not. I only do tax returns. I mean, but I can't even with Facebook, and anybody that can help me, I would be appreciative. They took over my email address and my password, and I can't even get in to Facebook.
Yeah, I just tried to get into your Facebook too, and
No, but it says I'm not me.
I know.
Yep, I'm not me. Anyway, I'm Esther Golias, the tax lady. 8030930, 8030930, star 930 on a cell phone. Text us 716-8030930. Yes. And you were going to go back.
I want to go back to that text. We joked a little bit because we were short on time, but you have to be very careful. If you are an LLC, you only want to run through that business that you have listed for that LLC, because if you put other income in there, you pay other expenses, that umbrella of protection that LLC gives you is null and void.
Right.
So now you could get sued for all your personal assets. So run it only that business that you have it set up for.
Right.
That you
so that would
registered
be
it
that
with New York
business.
State.
Right.
Yep.
Right. And so what you'd have to do is go and get, if you have 3 businesses and you want them all under the LLC, you have to apply for 3
Yep.
LLCs. Right. Okay. What do we have here?
We got another text. Esther, I'm inheriting approximately $25,000 from a deceased cousin. Do I have to pay Fed or New York tax on this, or declare it on my tax return anywhere?
Well,
Thank
it all
you.
depends on what type of income it is. Right? So if it's a $25,000 IRA, pension, annuity, if it's $25,000 in stock, if it's $25,000 in capital assets, if it's 25,000 in just cash, that's tax free. So it all depends on where the $25,000 came from. So if it's a IRA of $25,000 in your name that on a 1099-R, that's going to be taxable. If it's $25,000 from a piece of land that's a capital asset and you inherited it, you'd get a stepped-up basis, and when you sell it, you're going to take it by the fair market value at the date of inheritance and probably no capital gain. So it all depends on the nature of the money.
Right. I know me and Tiff had mutual clients this week where the one sister was the executor and Tiff did the other sister, and the other, do I have to pay tax on this money? And what's it? And it was the sale of the mom's home that the estate declared, and it was tax free. So you have to look at the source beyond the source, and
Right.
really, you got to talk to the executor.
Remember that if you inherit capital assets, you get a stepped-up basis, which means it's a fair market value on the date of the death of the person that gave you through the inheritance process the asset. Then you'd get but you don't get a stepped-up basis on an IRA or annuity. It's because you put that money in and it grew tax-free. That's just the nature of the beast.
Right.
Right? All right, I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. Okay, wanted to talk about the... yes, sir? Okay.
Oh, do you want to go to
Yeah,
Kevin?
let's go to Kevin.
Let's go to our favorite Kevin from Pendleton.
Hey, Kev.
Hey, good afternoon, folks. I'm interested in the Ford F-150 with the big bagger wheels. Am I calling the right number? No, sorry. Just kidding. How you doing, guys?
Well, you got to repeat that, Kevin.
Oh, I thought I was calling the phone number to get the Ford trucks, the F-150s.
Oh, yeah. Well, I got quite a number of them. I didn't know that my cousin died, and he left me all these Ford trucks. So if you just go to my Facebook page, you'll see it all there for
Just
sale.
offer
But do you
$1.
know, Kevin, I can't
shucks,
even go
man.
in there to write down that this is a fraud. They won't even let you content at all. But so for all of Buffalo that thinks I'm selling a Ford trucks, I'm not.
Oh, and I thought I was getting the friends and family plan. Oh, okay.
But if anybody would, it'd be you, Kevin, but I don't have any. The one other
All right,
time
no
I was hacked
problem.
and they thought I was selling Taylor Swift tickets for $100. So
Okay.
not
Okay.
really. All right, thanks, Kev.
Well, yeah, well, my question here, what I really call about, has the IRS indicated yet when they will start sending out the refund checks?
They sent out their first batch the other day, so they're
Oh, okay,
releasing
great.
funds. The important thing is, especially for you or anybody else that's listening, we never know when, but sometimes I would say 10 to 20% of the time they send out a letter prior to issuing the refund that says we would really like to make sure that this is really you, and they go through an identity verification before they issue the money. So if it's been a while since you filed, go to the irs.gov, where's my refund, and if they haven't issued it to you and that says it's in processing, you may be getting a letter that says you have to prove your identity, and if you need that help, you give us a call, we'll help you.
Oh, okay. Well, that's
Drive
basically
down
what
in
I
your new
wanted to
truck.
find out.
And I'll show you the
Yeah,
truck when
right.
you come.
Yeah, man.
Okay.
Thanks again. Have a good day.
Thanks, Kev.
Cheers.
All right. I wanted to talk about filing status. You know that those 5 little boxes at the top of the 1040 are so important because based upon your filing status, pretty much everything happens. The tax rate that they charge you, your personal exemptions, the limitation of credits and deductions. So, head of the household is a really great status for a single person. Why and how do you qualify? Because if I have an apartment, don't I qualify?
Yeah. No, you have to have a dependence that you support, and they have to be a relative that you support, and that would qualify you for head of household. Head of household is a more favorable filing status because your standard deduction is higher, and the tax that you pay is more favorable. And a lot of people, for instance, I was doing a tax return the other day, and she was a brand new client, and she is head of household, and we did one dependent, and she gets earned income credit, but then she's the custodial parent for another child that she doesn't get to claim because of the divorce decree, but she is the custodial parent, so she gets earned income credit, and because of the head of household, it's a very favorable. It's like a win-win situation. And so we amended several returns, and so my point is head of household is a very favorable filing status.
Right. So you have to have a qualified individual. Now, let me give you an example. Let's say you got $70,000 in taxable income. If you're single on that $70,000, you will pay $10,459 in taxes. If you're married filing a joint return on that same 70, you pay $79.39. So that there's a drop of $2,520 by moving from single to married filing a joint return. If you were head of the household, you would pay on that same $70,000, $87.65. So that's $1,694 less than being single. So getting to be head of the household is very important, but you have to have a qualifying individual that's either dependent upon you or your child that you maintain a household for.
Correct.
Right?
Yes.
And
Yep.
so that is absolutely important.
Something you don't want to miss.
Right.
You know?
I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930, right? All right, now, let's say that I'm still legally married and I'm having a war with my husband,
Right.
all right? And he moved out in February, and I got the kids at home with me, but we're still legally married. Do I have to file a joint return?
No, you said he moved out in February.
February.
Which is the beginning of the year. So if the spouse.
February of last year.
Okay, if the spouse is gone from the house at least the last 6 months of the year, you could file head of household if you had dependents or somebody that you support. So you could switch it to head of household. And it's really a good idea because sometimes it's hard when things are not amicable to file joint. And so this gives you that wiggle room.
Plus, also, if you only make $15,000 and you have the kids married separate, you don't get earned income credit. head of household, because you have the kids, will give you a refund of about $15,000.
And you know, let's face it, in divorce situations, not everybody's happy with one another. But so that parent who has the children living in the home, even though they're legally married, get the benefit of filing married head of the household. But the other spouse that doesn't have children living in their home, what would their filing status be?
That person would be married filing separate.
Right, so that means that spouse doesn't get the enjoyment of an earned income credit like the other spouse with the kids does.
Right, right.
And I mean, we're talking about thousands and thousands of dollars.
Yes, yeah. And sometimes, you know, you got to play nice in a divorce.
Well, that would be nice if they played nice.
If they could play nice, because sometimes it might be better to do joint than two separate returns.
Right.
I mean, because we're just talking if
Oh,
they have
you're right,
children.
right,
If
absolutely.
they don't have children, they both would have to do separate, and it could cost them a lot of money
Right.
because if they had stock losses, you only get to claim $1,500. If you had rental losses, you don't get to claim.
The
different
soft
credits,
deduction is $5,000.
No putting money
Right.
in IRAs.
Right.
So, yeah, you got to really run
So,
numbers.
so if you're married filing a separate return, if you didn't have that situation with children that lived in your home, and the spouse was gone for more than 6 months, when you're filing separately, you lose the student loan interest deduction. If one spouse itemizes, the other spouse has to itemize, even though they can't itemize. No daycare credit, no earned income credit, no education credit, no adoption credit, and the Social Security automatically becomes 85% taxable.
right,
So,
right.
so those are just a few of the no-nos about filing status. You know. Oh, I know. The other thing is when we have. Oh shoot, we got to go for the news. Yeah, that's right. I'll tell you on the other side. Cliffhanger.
Suspense.
Yeah, I'll talk to you on the other side. I'm Esther Golias, the tax lady from EG Tax. Thanks for listening. Hey, to us, you are family. I'm Esther Golias, the tax lady from EG Tax, welcoming everybody in Western New York, Southern Ontario, and Florida. And we're on WGUF in Naples, Marco Island, down in Florida. Would be nice to be in Florida today.
Hey, we don't have the freezing rain today, so.
No, we're going to get it tonight and tomorrow. Anyway, okay, what's our... Oh, I want to first go to Steve, who's waited for so long. Hi, Steve. How can we help you?
Hey, it's the family EG Tax. Appreciate you. Hey,
Thank you.
My dad was in a nursing home for 4 months last year. And is there anything you guys do his taxes? So I'll come in this spring to have his taxes done. But is there anything to show what we paid per month? Because we're paying like $16,200 a month.
Is
And
he
his
private
tax-
pay?
I would say with that
Yep.
amount a month, yes.
Yeah,
Yeah, so
because you're
his-
going to get the refund of the bed tax. So they charge you a 6% bed tax on that $16,000.
Oh yeah,
so
yeah. It was
that
like 12. There was a $1,200 charge. I said, "Hey, what's this $1,200 a month?" And he said, "Oh, that's
Right.
New York State
and
tax."
so if it was for 4 months, you'll get $4,800.
oh, well,
So,
th-
yeah,
they'll
all
be
we need
subtracted
is
off-
his
that'll be-
monthly invoices.
That'll be
Right.
subtracted off of Dad's taxes that he owes, right?
No. They're going to send you the 6% as a refund from New York State. And so if it's
Oh, wow.
$1,200 a month, it'll be $4,800 refund.
Oh, okay.
So that's worth a trip down, right?
Right now, what I was thinking of that $16,000 a month because that was like 64.
Oh, and that's a
can we-
medical deduction as well. Yep.
Okay, so we can estimate or itemize his taxes for that.
Absolutely. Yep.
Okay.
You can.
What do you just bring in the state? Because I asked them this. They're not. It's funny, you know what? They want to know you when you're there, and now he's not there, and they're not returning my calls to business manager because I'm saying, hey, can I get an end of year-end statement how much we paid for EG Tax when he does? And they don't want to know me now. So can I just bring
Well,
in the
here
statements?
you paid by check, didn't you, or credit card?
Credit 1 by check and then 3 by his credit card.
Well, then, as long as you have that's proof of payment.
Okay, and then the statement from them, Eldwood, how much it was every month?
Well,
If you
I mean,
do you
you-
have their monthly bills?
Right.
Yeah, it says payment, like auto pay on it.
But you don't have the bill that shows the gross amount of the nursing home expense?
Well, it's the monthly. They sent me a monthly statement showing,
Yeah.
the
Do you
month-
have those?
Yeah, Yep.
That's all we need.
Okay. All right. Thank you.
You're very welcome.
Sorry about
Sorry
Dad.
about Dad. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. Okay, so here's what I wanted to talk about before the news. How many times do you have a young couple come in, and they're so cute, and you have two folders, a folder for her and a folder for him, and they say, we think we should file, we got married in like November, and so we're going to do taxes on our own. I'm going to file single, and he's going to file single because we got married in November. Is that right?
Nope.
How about if they got married December 31st?
Nope.
How would they file?
They either file married joint or married separate.
Right? I told them once you said I do, you have two options: married joint, married separate, or that very unusual exception because you have children in your home, and he
you
was
didn't
gone
live
for the
together.
last right, and they lived together. They didn't live together. So basically, if you got married before the clock strikes midnight, making it another year, even though it's 1 minute before the end of the year, you are married and you have to file a joint return or a separate return.
Yep.
So-
Yeah, I mean, that happens a lot where somebody are you still single? No, I got married last year. Oh, where's your husband? Where's your wife? Oh,
Right.
you needed their
I think
stuff?
they're just going to file on their own. He's filing single. No. You can't do that.
Yeah.
Right. All right. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930, or you can also go to our website, Ask the Tax Lady, and I'll be very happy to answer your questions. But we have Dave that's holding. Hey, Dave.
Hi, how are you, Esther?
I'm marvelous.
I'm glad to hear that. I always love listening to you. I have
Thank
two
you.
questions. I'm a retired police officer. I served 28 years. I retired in 2003. And when I retired, I took a regular retirement. 2 months later, I'm visiting my doctor because I broke my back on the job. And he says I'm entitled to Social Security disability, which I got passed on. I got it right away. So my question is, am I considered disabled? The doctor's report said that I was disabled 100% as far as being hired any place. I have not worked a day since I retired. And would it be a benefit for me to file that way?
Okay. How old are you, Dave?
I'm 76.
Okay. So there is a stipulation in the law that says that if you retire before age 65 and you're disabled, then the pension money that they give you can be considered wages so that you could get the earned income credit. But once you turn 65, the spigot turns off and it's no longer going to be any benefit to you to be disabled or not disabled because you're past normal retirement age.
Yeah,
Okay.
so for tax purposes, there's no
No
other
benefit.
advantage for being
Except
disabled.
that you're a nice man.
Well, I thank you so much. And I love your show, and I swear by you. God bless you.
Thank you,
God
Dave.
bless.
All right.
Bye.
I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. You want to talk about kitty tax?
Meow, 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 meow,
No,
meow.
not kitty tax.
Oh,
Kitty tax.
Sure. So
So when is it that somebody should be aware that it could even happen?
well, let's first define the IRS's definition of kitty.
Right.
That's any child you're claiming on your tax return that's under age 24 and a full-time student. So if high school, that counts. College, that counts. If your kid doesn't go to college anymore and they're working, you can't claim them, so it cuts off at 19. So it used to be 3 years old. It used to be 10 years old. It used to be 16. Now they changed it all the way up to age 23 if they're a full-time student. So you have to look at their investment income, which is interest, dividends, capital gains, and it's any unearned income.
And
So
unemployment.
it could be unemployment too. So if that is more than 1,700, then the kiddie tax comes into play. What that means is that child's income gets taxed at the parent's rate.
Right.
So,
But the parent can make an option where they could claim the kid's tax income on their return and not do the kiddie tax return. But the benefit would be that they would they'd pay a higher tax on the first $1,300 if they were over the 10% tax bracket. So this was Congress's way of saying, oh, mom and dad, you think you're so smart. You're going to put all this money in your kid's name because you think your kid's got a $15,000 standard deduction. Not so fast. If your kid has substantial unearned income from interest, dividends, unemployment, and the like, they have to pay taxes at the parent's rate.
right.
Unless the parent claims it, right?
Yep.
Okay, we got something else here?
We've been talking about this, but what are the advantages and disadvantages of filing joint or separate?
Well, I mean, again, if you have children living in the house and the spouse wasn't there, the second spouse wasn't there, then the custodial parent could file head of the household, and the other spouse files married, filing separate. That's one of the situations. The part that is a hindrance would be your student loan interest is not deductible. If one of them itemizes, so let's say one of them's got the house and the medical, and can itemize, but the other parent has nothing, maybe lives in an apartment, parent one, who's married filing separate, might have a more larger balance due, and the other parent gets the benefit of filing separately, because if one files joint, the other, married itemized, the other one has to itemize. So that's another thing. No daycare credit. You're paying to have your kid babysat, and there's a credit. You can't take that credit. No earned income credit. We always talk about earned income credit. You got kids and earnings. If you're married separate, you don't get the earned income credit. No education credit. The American Opportunity Tax Credit, up to $2,500 on the federal, like $400 or $500 on the state of New York. Nope, no dice on there. No adoption credit. The adoption credit's what, $13,800, something like that. No adoption credit. So and you have to pay at 85% on your Social Security, because a lot of times my clients will say, "Well, we'll file separately, so I get a break on the Social Security." Doesn't work,
No.
So that's some of them.
Yep.
Okay, and then we got something else.
We do. This might be a silly question, but it should be one. But should one be saving IRA contribution paperwork for each year they contribute, and include year-end of year amount? I'm just wondering if I need to save 40 years of paperwork.
Well, it all depends on if you had a non-deductible traditional IRA, right?
Right.
You're 8606,
606,
right?
yep.
And so you're supposed to be filing an 8606 every year, but if ever it came to the place where they said, well, how do you know this basis is correct without the paperwork? But again, this was only be if you had non-deductible IRA contributions.
So every situation is unique.
Right, absolutely. Okay, I'm Esther Gilius, the tax lady from EG Tax. We're going to take a short break for the news. We'll be back on the other side with your calls, questions, and texts. Hey, family, this is Esther Gilius, the tax lady. Our phone number here in studio is 803-0930, 803-0930, star 930 on a cell phone, and you can text us at 716-803-0930. And I'm with Chris Fabian here, and Tiff went back to work.
Yep.
and we are busy doing tax returns. We're open tonight till 9 at all of our offices.
Boy, I wish we could hear that shout song one more time. But don't watch the Super Bowl.
That's right. Didn't you love it that he got MVP?
Yes.
Yeah.
And the award show was great. Snoop Dogg was so funny with his monologues. I mean, for the monologue on the NFL award show to talk about the refs, that was something,
Yeah.
So one of my clients said, I'd love to see Kansas City win because of a bad call by the ref, because that would be in the Super Bowl. So maybe then it would cause more attention and actually cause investigations.
I had a number of clients this week that said they thought it was rigged, and I said those guys are playing their heart out. It can't be rigged, but it could be that maybe the ref would not make such a favorable call depending upon if it's close. But we're not saying
That's
anything.
that, not this.
Right.
Let's get
All right,
back to
let's go back to taxes. I'm Esther Gullius, the tax lady, 8030930, 8030930, star 930 on the cell phone. I just thought it would be interesting to talk about how the type of income you get pays different rates of taxes. Like, for instance, the highest rate of taxes that you can pay is on wages.
Ordinary income.
Right,
Yes.
or because it's taxed just. There's no special tax treatment on wages. However, you don't pay taxes on everything you make. There's so many things that go into your W-2 form that are not taxable. Like, for instance, your health insurance. When your employer is paying your health insurance, that's a freebie.
Right. Yep.
Interest. Interest is taxed as ordinary income, just like wages, unless it's municipal bond interest. When that would be, like if you did the bridge authority,
Right.
and that would be tax-free on the federal and state. But if you are a New York resident and you have a bridge authority from Colorado, then you would still pay taxes on New York State.
Correct.
The municipal bond is only good as a tax-free item on the state of New York if it's a New York municipal bond.
Right. Let's go back to wages for a second. Just thought of a client that I had today. We're going over their return, and they're like, wait a minute. I thought I made more money than I said, well, your tax return shows your wages combined was about $120,000. But if we look at it, your W-2s, you had your 401k contributions, you had a flexible spending account, you had this. You and your wife actually made $150,000. $120,000 shows up on your tax return. Take away the standard deduction, you're only paying tax on $85,000. And they're like, wow, that sounds really great.
Right. And then when you add your children, their child tax credit is $2,000 per child. You got 4 kids. That knocks $8,000 right off the bat.
You're probably paying no tax.
Right. And people don't know that.
Yeah.
They don't know that they actually are paying no taxes.
Yep.
But then there's people that are paying taxes. Okay, if you have a pension, an IRA distribution, or annuity, how are those taxed?
Well, those are ordinary income as well.
But what if I had an annuity
Well,
that I contributed $100,000 to?
Right. So then it depends how much of the annuity is worth and how the annuity company works the distributions. Do they prorate it where they take, 75% as income and 25% as principal? Or do they just say all your income from it that it produced over the years, that comes out first, your principal comes out last. So you got to look and see how everything is done.
But of course, and that's the important part, is the principal. The money that you put in, you're not paying taxes again. Only the appreciation on the annuity, if it's after-tax dollars.
Yeah.
Okay. And did we have another text?
We got another
Okay,
text.
yeah.
I worked part-time for about 6 months and made about $6,000. But my Fed taxes taken out on my W-2 was only $60. What happened? I claimed 0.
Okay, well, here's the thing, and we don't have you here, but if that's all that you had was $6,000, if that's your only source of income, and you're under the age of 65, number one, you might qualify for the earned income credit, right?
Yep.
And number two, you don't pay taxes, so you're going to get back the 60. When they looked at the withholding charts, they thought, "Oh my gosh, this person's poor. We don't want to take money out." So that's why they didn't withdraw anything.
Yeah, if this was a second job, you would have had to do page 2, 3, 4, and 5 of the W-4 to say, hey, I work another job. Here's this income. Here's that income. This is what I need withheld.
Right.
And they would have withheld, because
Right.
then you would have, on the extra withholding line, put in to have them withhold extra.
Right. And then here's the other thing. Let's say that at the end of when you do your tax return, you find out that your refund is only $400 and you think, gee, I'd like a bigger refund. Well, that means that what you want to do then is have them take more money so that you send it off to the IRS, and you know how good they do with that money. And then at the end of next year, they just send you back that money again. So remember, unless you have credits, what you're doing, that your refund is nothing but money that you sent off in advance that they're giving you back.
Right.
And
interest free.
And right, and they're not and there's no interest. Well, let's go to Joe from East Aurora. Hi, Joe.
Oh, that was quick. Hey, I love the show. I got a question for you, Esther. Your fellow that just called a little bit ago got me thinking about something as far as somebody's deemed Social Security disabled, and they're deemed like 100% disabled where they can't work.
Right.
First question being is the back pay. If they give you back pay for that, what's the tax situation for that?
Well, anytime you get back wages, that's just ordinary income. And again, what we were talking about was making that annuity that he's getting.
He's talking about back pay for Social Security.
Oh, is that what you're talking about? Okay. Well, then it's really not pay. It's not.
Yeah.
What's
that would be if you got let's say that you applied for Social Security disability and they gave you $60,000, $20,000 for 2022, $20,000 for 2023, and $20,000 for 2024. You can do a lump sum election, and if you had no income or very little income in those base period years, that would mean that there would be no taxes due on those first 2 years, and the third year would just go into the 2024.
Okay, and then the other question I had was what you were telling that other fellow about. Go over that again. If you're under 65, as far as
under 60? Are you under 65?
It's not me, but the person is.
Okay.
Yes.
Okay. So if you're under the age of 65 and you're retired on a disability, and it's a code 3 on the 1099 R, then that disability is considered wages and may get you an earned income credit, especially if you have children in your house.
Yeah. What would you have to do? Refile for all those back years then to get that, Esther?
Well, that would be lovely, wouldn't it?
Yes, you would have to do an amended return.
Yeah, well, it might be worth it though.
And they pay you. When you do an amended return, they pay you interest on that.
Mm-hmm.
So let's say you end up with $1,000 refund for 3 years, then you're gonna get interest as well. I think it's worthwhile.
Well, that's something you guys can do too, right?
Yep.
Well, yeah,
Okay.
we do that.
Okay.
Yes, I sell trucks and do that. Yeah.
Hey, do you sell any? You got any places in Florida for sale?
No, just trucks. Just trucks, Joe.
Trucks? Oh, I don't want a truck. I want a beachfront place or something. Thank you.
Yeah, thank you, Joe. All right, I'm Esther Golias, the tax lady from EG Tax. Wanted to talk about this quickly. Self-employment income. That's when you have a business and you're performing a service or selling goods, right?
Yep.
And so you do a Schedule C if it's just a sole proprietorship. If you wanted the protection to make sure that somebody doesn't sue you for more than your assets, you'd put an LLC on that Schedule C.
Right. And I know we just had somebody this week got a 1099K. from Ticketmaster.
How much was on there?
I was my wife's client, she would be I had a client that, but he had season tickets and he sold his season tickets and then he bought them back and he goes, well, can I take my buyback of my tickets that I sold? No, that's not an expense.
Right.
That's a personal.
Right.
But he had to record the sale and it was a Schedule C because he did it
Right.
as a business.
And so when you have a Schedule C on the net profit, what people don't understand is that you have to pay FICA on the bottom line plus income taxes, state and federal.
Yep.
Right? And especially if you're a pastor, pastors don't realize that their housing allowance is tax-free income tax. But unless you opted out of Social Security, you still have to pay FICA on that housing,
Right.
which you can then reduce by any unreimbursed expenses. So that's how you pay taxes on self-employment. And then the other thing, short-term capital gains, you pay it as ordinary income, just like wages, right?
Correct.
So, but it would behoove you to make sure that you own it for a year and a day, because it changes from being ordinary income to capital gain income, right?
Yes.
Long-term. And that's preferential.
Right. That's either 0, 15, or 20%.
Right. And so you could actually sell stock and not pay any taxes at all. Right? Anyway, I'm Esther Golias, the tax lady. We have 31 area offices to serve you. We have our office on Airport Pulling Road in Naples, Florida, and our hours are 9 to 5, 9 to 9 Monday through Friday, 9 to 5 on Saturday. We are open this Saturday and next Saturday until 9 o'clock to serve you. We do everything the big guys do, but we just do it a little better. Yeah, Chris?
Oh yes, yeah, no, yeah. We're here for you. We love, and what I think sets us apart. And I know we don't like doing this as a commercial, but we do the tax planning
while we're doing the return.
Yeah,
right.
we just don't spit out. Here's your refund. Goodbye.
Yep.
We like to help you plan for next year.
And I'm going to tell you, if for those of you whose heads have been spinning because of how fast Donald Trump has been doing things, he's really going to Congress with the senators this week to see if he can make Social Security tax-free, tip tax-free, and what was the other thing? And overtime tax-free. And so I would not be surprised. Anyway, I'm Esther Golias, the tax lady from EG Tax. Give us a call if you need the best tax help. Thanks for listening. We'll see you next week.